Ladies and gentlemen, welcome to the Midday Market Monitor. Now, we have Trump being asked questions right now. I want to go to that to make sure there isn't anything that he's covering that isn't going to affect markets. So let's go ahead and jump over to there, see where we are right now, and then we can jump back into covering the stocks.
Be able to immediately sell their oil to market, and will U.S. sanctions snap back immediately if there is a delay or
money? They would be in poverty. The 91 million people would starve. So something will happen as soon as they behave. When they behave, we're going to let that go. We're going to have to. I put sanctions on a lot of people, and then I let them go. A lot of countries. Yeah, please.
Thank you, Mr. President. My name is Shinji Abe. I'm a Japanese Yomiuri newspaper company from the Washington correspondent. My question is about the Strait of Hormuz. Did you ask other G7 nations to send military force? And what specifically are you asking of Japan? Or
where are you from?
I'm from Japan.
From where?
Japan. And is
military
support?
I just left your prime minister. Japan's doing very well. She's my biggest fan, I have to tell you. She thinks I did a great job. You have to call her and ask her. And, she's doing a very good job, by the way. Go ahead.
And military support is no longer necessary.
Yeah, but what do you want to know? Go ahead, just tell me. What do you want to know?
Okay, my question is, did you ask other G7 nations to send military force? And what specifically are you asking of Japan?
To send the Air Force? For what? Oh, other countries, not just Japan. No, I don't need, we don't need it. Oh, by the way, they all want to do it. They all want to do it. Every single one of them. They want to go be a part of it now. Not while the war was going on. I was a little disappointed. The UK, I said, yeah, it would be nice if you sent ships. I didn't put a hard sell on, but I said it would be nice if you sent some ships. And the Prime Minister said, they'll be there, sir, as soon as the war is over. I said, did he just say that? I couldn't believe it, actually. Japan has offered to get involved, but I mean, I'll be honest, Japan was not willing to get involved during the war. I asked her, I said, you want to get involved a little bit? I didn't put the heavy sell on, but they said, no, we don't want to get involved. Nobody did. We did it ourselves with Israel and with the Arab states that got hit, surprisingly hit. Yeah.
Mr. President?
Yes, please. Go ahead.
Thanks a lot, Mr. President. Question on Brazil. I would like to know, how was your interaction here in ADYEN during the G7 with the Brazilian President Lula? Did you talk about the new U.S. tariffs on Brazil? Did you talk about the U.S. designation of criminal gangs as terrorists?
We did.
How was it?
I spent a lot of time with him, actually, and it's become a little rough country, right? Politically, it's been a little dangerous politically. You're talking about Brazil. Yeah. It's been nasty. I hear they arrested somebody that's running for office today. I found that out after we left. I just said goodbye to him, and I heard that they arrested the Bolsonaro Jr. He was doing well in the polls, and they arrested him because he made a statement in Texas. They arrested him, or they want to arrest him. They have something out for his arrest. No, they play pretty tough. But nobody plays tougher than the United States. Look, our elections are totally rigged. We have rigged elections. Please, in the back. Yes, sir. Go ahead.
Thank you so much, President.
Thank you.
Sumu Sakamoto, the Asahi Shimbun. For G7, the concept of the rule of law has long been considered the core principle. During this summit, any of the leaders expressed any concerns on the possible violation of international law on the attack on Iran?
No, actually the opposite. They felt they were very dangerous. They were very relieved because they could get hit too. They were very relieved. No, we never discussed that. No, it'd be the opposite. They broke the law. They killed thousands of people. They killed thousands of our soldiers and hundreds of thousands of people. Yeah, please, go ahead. Go ahead.
Okay. Mr. President,
Yes.
yesterday, the Pakistan thanks for the Chinese government to help make a peace talk between Iran and the United States. So what do you think about the China's work to get the United States and Iran sitting down to talk and make the deal? And the second question is...
Okay, let me answer the question.
Okay.
So I think China's been terrific. I tell you that before. They could have been bad. They could have sent in to try and block or break the blockade. They could have sent in an oil ship with 6 destroyers alongside of it on each side. They didn't do that. President Xi helped me. He tried to help, and I think he probably helped get it solved. You know, they get 50% of their oil from that location. So that wasn't that easy. President Xi was fantastic. He tried to help me solve it. And he didn't give any big weaponry. I guess we'll find something somewhere along the line, but he didn't give any big weaponry. I can tell you that. No, I think China I couldn't ask for much more. Again, they were impacted because they get more than 50% of their oil from the Hormuz Strait. And no, I thought they were fantastic. Okay, how about one more question right here? Go ahead, please.
The latest YouGov Economist poll shows that Democrats have lost a 5-point edge on the generic congressional ballot. They just have now just a 2-point lead since February. Do you think that they're losing momentum?
Well, I see the Republicans in generics. You know, generics are very important. I don't know how accurate, because I see a lot of bad polls. The polls are very dishonest, just like a lot of reporters, like these people over here, are very dishonest. CNN, ABC, it's a whole group of them over there. They're really dishonest people. But, you know, and really networks are very dishonest. And they have to straighten themselves out, or they're not going to be very successful, because people don't believe them anymore. But no, the generics are very interesting because the Republicans are coming up strong even before this. You know why? They're seeing all these lunatics, like the guy in Maine with the swastika. You know, for 10 years they've been calling me a Nazi. And now they have a Nazi running. He's got a tattoo on him. I've been denying it for 10 years. They know it's not so, but they've been calling. I don't think they could call it to me anymore. You know, one more? One more? Go ahead, Peter. Let me finish with Peter, because he's been better to me than he's been to Biden.
Thank you, President Trump. I have a question about this weekend. Why not stick around for the signing ceremony with this Iran peace deal?
I might.
You might.
Yeah, I might. But I'd rather, this is a memorandum of understanding. It's very important, but it might not be the kind of a document that I should be signing.
Is there some element to this where you send the vice president, if it works out, great, you look like a genius for sending him. And if it doesn't work out, it's the vice president.
I like that idea, sure. What? This way, if it works out, I'm going to take the credit. If it doesn't work out, I'm blaming JD. You better be careful, JD. He's going to turn his plane around and get the hell out of here. Yeah, I like that idea. I think it's a good idea. Thank you very much, everybody. Thank you.
And I'm muted, like I always do, and I always mess up. There wasn't too much additional news at the end there that, you know, I think the markets are going to feed off of. Now, the S&P 500 and the NASDAQ are both down roughly about 0.1%. Nothing too crazy. I wouldn't say this is a fearful day. I think that this is jitters, and this is sort of what we expected going into the FOMC meet today. We're going to hear about the announcement of which way that the Fed is leaning, if they have made a decision to cut or raise, most likely, and by far the biggest, you know, possibility right now is that there is no rate change. But obviously, with a new Fed chair, there's a potential for a lot of disruption. And so the market's going to be a little bit on edge. We're going to get that at 2 p.m. Eastern Standard Time. So that'll be in 50 minutes. Afterwards, 30 minutes from then, Kevin Warsh will step in to do his first speech in front of the committee there and all the reporters and all that, where there'll be the first sort of Q&A amongst Kevin Warsh as the new Fed chair. So this is a big, big day for the bulls, for the bears, for everyone in between. Strap in. It's going to be an exciting one. Now, going into actual industry and company-specific news, really interesting. After the market ended up closing yesterday, we ended up seeing that SoFi CEO Anthony Noto ended up purchasing shares in the open market. He purchased 13,888 shares, which was less than his previous purchases, every single one of those purchases. However, he purchased at one of the highest, if not the highest price he's ever purchased at $18.05. Whenever you total up, so he's had roughly 5 purchases over the last 3.5 months, something like this, totaling $2.25 million. $18.05 is the highest there, and I think the average comes out to about $17.30. Okay, he's been able to acquire many shares under those prices, even buying into some pretty amazing dips after Muddy Waters ended up shorting SoFi. And to be honest, looking back on it, especially now at these prices, it really went nowhere, that short. So, you take on so much heat in the market, you generate so much discussion whenever you do these shorts. And what was the opportunity to go from, $17 down to $15.50? Where betting long on a company, picking the names that you do like rather than the names that you don't like, you have infinite upside. The only amount of money that you're able to lose is the amount that the company, if it were to go exactly to zero. And most of the times that doesn't even happen. Even in failing businesses, you usually have those companies be purchased for pennies on the dollar. And so there's usually some sort of asset recovery, something like this, where another larger business or private equity firm will come in and buy that company from you, even if you do get things wrong. So this is why I don't think that people should short. I think that they play an important role in the market to sniff out fraudulent businesses. But then you get people like Andrew Left and, going to prison and everything, and it's hard to sniff out which ones are the actual genuine good actors and which ones are manipulating markets to find their way, because it's easier for them to do that on the short side than it is for them to do it on the bullish side, because there's so much more media attention on negative reports than there is on positive reports. Okay. Let's see. That being said, so here, let me share. Oh, I was just sharing that. Anyway, so yeah, $250,000 added from Anthony Noto, seemingly because he wasn't the only person to have insider activity during that day. There was 3 people who ended up selling shares of SoFi on the same day. It was Kelly, I think maybe Robert Levitt as well, and then also Jeremy Rischel. And I'm interested to know if he did this purchase. This is not the only time he's done this, where he had made an insider purchase during a moment of a lot of insider selling to kind of change the narrative a little bit and continuing to bet on that name. But it's working out for him. We're already up. SoFi is a nice beneficiary today, not only of the potential for rate cuts, but also the fact that, and I think Robinhood is also up because of similar news, that SpaceX is showing off that there is a ton of retail activity in trading right now, but the position that SoFi has now, having options contracts, having the ability to buy and sell equities much better than we did, 2 years ago, could lead to them having a real explosion in growth, considering they had IPO access. They have options contracts opening the same time as everyone else for SpaceX the next day. And this is why I think Robinhood's up 12%. I know it's pretty crazy, but there's sort of two stories happening at once. We have the World Cup and in event contracts skyrocketing. And then I think there was also channel checks coming in from Robinhood showing the unbelievable options demand for SpaceX happened after SpaceX reported that their June month was by far their strongest month to date so far. That was before SpaceX ended up, opening up options on Tuesday. And as Dylan says here in chat, there can be a lot of speculation about where SpaceX price is going to go. Where there's no speculation is how that affects Robinhood. Buy or sell, they make money. That's the beautiful thing here. So there can be a slowdown in activity. There could be, I think the exciting thing for Robinhood and why I'm betting on it and why I think it'll go to much higher prices. I'm talking like $200+ a share is that right now at these prices, or at least yesterday, whenever I put out my video on Robinhood and why I'm buying, is that this is one IPO of 3 that are going to be bringing in just unbelievable levels of new activity. And just like Tesla, which has held up in sort of like the top 5 most options traded activity stocks in the market, SpaceX is going to hold up that average as well and bring up the total amount of activity, plus agentic trading, plus SoFi banking that continues to roll out to new users, plus the Robinhood credit card, plus their ability to roll out index options and futures and all of these additional products that people are still utilizing and growing quarter after quarter. All of that is tacked on. In the real bear case for Robinhood right now is crypto. So if you can get the numbers, to look good on Robinhood, excluding crypto, which I honestly think it did, especially yesterday, 12.5% really does start to change the valuation on some companies. But crypto, you can kind of write off as a nascent business right now. And then whenever it does recover, which I think most people think that will eventually come back because it's done that every single cycle, then they'll be much better prepared as Bitstamp continues to integrate into Robinhood. WonderFi acquisition just got completed. Like, they will continue to go international and bring more products to life. But right now, it's event contracts and options contracts, and that's what's going to lead Robinhood to higher highs. How can crypto matter so much to such a big business? Well, how much does crypto matter to Coinbase or any of these major businesses? It's not that big of a business. We're talking about a sub-$100 billion market for a multi-trillion-dollar industry. Crypto at its highs last season was like $4+ trillion. You're talking about like the level of like, how could you're essentially saying like, how could silver impact commodities markets? What are you talking about? Of course it can. And plus, the fees on crypto are much wider spreads than equities. What about Micron earnings next week? I'm super excited. I can't wait to see it. I'm not buying into those earnings. I'll see what happens. Is there a possibility that I double down on Micron after earnings? Like, let's say there's a like this is literally what happened last quarter, almost verbatim. We ended up seeing them beat on revenue. I think it was 22%, beat on EPS by 40%, and then raised guidance by 46%. Someone double check me on those numbers. I think I just got it. I think I just bullseyed that off memory. That being said, whenever that happened and they just dominated Wall Street expectations, the stock fell from essentially $450 down to $315 or something. Like it took like a 30% drop, really surprising. Brought down the forward P down to like 3 times. The market was shocked. if that happens again, I'll double down. Yeah, exactly, Dylan. That's the hope. That's the hope. I hope I lose money on the day, and I will double down on my conviction on Micron. You know? People will say it's priced in. Yeah, Vital, you almost got me stirred up. Yeah, that's what people were saying last time. They're like, it's priced in. I'm like, it literally was not. Like, not only was I like 100% correct that 450 was too low, but the fact that they brought it down to 317 or whatever it was, I think my lowest buy was like 330. It so clearly wasn't. and like, how can you be priced in for an industry that's still growing on price? Like, we have no idea where this settles out at. And then also they beat on revenue, EPS, and guidance. How do you say it's priced in to beating expectations? Not beating their own expectations, beating the accelerated guidance. You know? So, I don't know. One thing I would like to highlight, though, excluding Micron here, is actually fintech stocks. This industry has kind of been on its back foot for the most of the last year. And there's some pretty extremely interesting valuations here. I was going through and looking at some of these names, Toast being one of them, ADYEN being another. $10 on ADYEN. It hit $8.93 earlier. It's like, I remember the first time I bought ADYEN, it might have been around here. This, I think, was, yeah, it was right in here. So they had an earnings that killed the company. And I mean, we went from $18.70 down to $6.55 at its lows. And this is when I was making all my ADYEN videos. This is one of the strongest payment companies in the world. And no one really talks about them because people don't really hear that name ADYEN. But if you are to go and use, let's say, Google or Meta, or especially Amazon or Walmart or any of these things, a large percentage of the overall payment volume that you're doing online is done by ADYEN. They're one of the fastest growing, most technologically advanced. I'll probably do an updated video on these companies that I haven't covered in a long time. But the fact that this company has just continuously gotten sold off because of worries that, you know, somehow agentic payments or something along these lines are going to change these businesses, or AI is going to disrupt them. It's absolute silliness. Now, I'm not rushing in to buy these names right now because I still think that it could be some time before they start to revert. But I'm putting them on my close watch list here, looking at ADYEN, AFRM, Coinbase, even if crypto comes back, Upstart, SoFi, Nubank, Robinhood. These sort of companies, if you guys have been following for a long time, you know, I know those businesses very well. I love the industry. I think that there's a ton of recurring high fee, you know, growing total addressable markets. I love that fintech financial services space. That said, there's a time and a place for every investment. And I don't think that that's quite yet for some of these names. I think it might be for Robinhood right now. That's sort of like turning the tide. And FOMC commentary might open up a door for SoFi to begin running, or Upstart to begin running if we end up seeing a good rate environment. And then it's a completely different story for the payment names and these sort of stuff. But yeah. Nubank is green today, as John says. Yeah, I know. It's a rare day in the last little bit. But it's a beautiful company. Like, Trader Tanner. Yeah, but I'm not trading. See, I'm looking to find the best times to buy. Even Warren Buffett did this, right? Like the only times that I care about the price is whenever I'm buying and whenever I'm selling. So I'm not actively getting out of these trades. I didn't trim Robinhood from 150 down to $70 or whatever. You know, I didn't sell SoFi. I didn't sell Nubank. So I'm not trading, but I am looking for, advantageous, really, really low prices to buy companies that I believe won't be opportunity cost in the short term. Yeah. Now, that being said, this guy says, mark my prediction. I don't even see another comment from you. So your prediction is lost in space. These guys like 5 minutes ago will type like a thing and just send it into the void and then go. Now it's stapled into the internet. Everyone will remember. Market. Market. Yeah. Well, good luck to you, my friend. I don't know what your prediction is, but I wish you the best. Palantir is another interesting one that I'm absolutely looking into right now. He said the Fed will cut. Well, there you go. Yeah, we will mark it. We're actually going to stake your entire channel on it. We got to have some table stakes. GBN, if they cut, we'll mod you. And if they don't cut, you're getting banned. There you go. Mark it. Someone mark it. I'll ban him. Don't ban him. We're having fun. Okay. Deal. He's a believer. He's a believer. Tanner, did you see that Josh Brown bought into Hood and talked about it on Compound? No, I didn't. That's very interesting. I've not seen the most recent episodes, so yeah, I'm curious what his thoughts are on it. I'm curious what Josh's comments are on the what is it called? The new like managed portfolios part of the company that they ended up acquiring. What's the name of that? They acquired a business that essentially allows you to have your Robinhood account and then also signal to financial advisors that you would potentially want to speak with them, and then they could potentially win you over as a customer and manage your money. So I'm interested to see, because obviously Josh Brown is in that space with Ritholtz Wealth Management, whether or not he likes Robinhood more or no. Yeah. GPUs is up 50%, but after like, it's not really the name I'm looking to buy into. Allbirds, same thing. Big bump today. I don't know why. I think it might be a setting, but that it doesn't resize every time. There we go. Robinhood up 12. Abcelera up 11.3%. Airtest Systems up 10.7, $116 a share. Nebius almost hitting new highs again. 286.54. Let me blow my nose really quick. And then we'll continue on. I'm back. Okay. Let's see what else is happening in the world of CNBC as well. A lot more SpaceX talk. AWS working with Rubrik. These are interesting stories, but nothing too crazy. Okay. How much potential do you see for Abercrombie and Fitch? I don't know the business model too well. I'm not sure. Are they on the comeback? Is that the name? Is that the name to be following? Okay. Vertiv is up 7.7%. Copang up 7%. Lending Club is also up 7%. Holy. What's the market cap? 2.3 billion. They got to change that name. They're no longer Lending Club anymore. I think they're called like I don't know. They have a different name, like Bark or something. Like it's completely different. I actually don't care enough to look it up. That's so funny. I was halfway through looking it up and I was like, does anyone care? Nubank up 6. Wow. Wow, 13.5. You know, this company is up quite a bit. You get it as low as $11.20 recently. That I think will go down in the history books there. Okay, what else? DRAM is up 5.5%. ASTS is up 5.3%. Dell's up. Rocket Lab's up. SpaceX, though, I think is actually down today, at least the last time I saw. Recovering quickly, though. Uh-oh. Can't hold this name down. 199. About to break 200 again. I will be listening to Warsh. Unless I have my numbers incorrect. Should be at 2:30. I don't know that he's live earlier than that. There are some people talking on CNBC right now. But we will get a rate decision at 2 p.m. That's 20 or so minutes from now. And then we will get his call here soon. Any thoughts on cybersecurity? Well, I've always looked for positions in the cybersecurity space. I definitely think it's interesting. It's non-discretionary. In the worst depression you could imagine, people are still going to pay their CrowdStrike bill because the alternative could be even worse. So you can't be selective in cost whenever it comes to securing the rest of your business. It's like paying your insurance. It might even be enforceable through your insurance if, under some policy you're expected to be working with CrowdStrike or some of these businesses. Who knows? That said, those companies hold some pretty intense multiples as well. They seem to be priced quite high. Okay. And a lot of the times I'm fine with picking some companies that I think will continue to just do well over a decade, and that's fine. But there's some businesses as well where potentially I see them doing well for a decade, like NVIDIA, for example, but then they also, investors are giving them quite a low multiple. And so I feel like they're being disrespected a little bit. And my alpha is, not only do I understand the company, I think it's going to go higher, but I think they'll grow based on earnings, but then they'll also grow in their stock based on a re-rating in the company. So I don't see how companies like CrowdStrike can get re-rated higher. But I wouldn't have thought that at 500 either. And now we're like 700s, I think, last time I checked. 688 now. But still, this company is expensive. Likely to continue to do well, but expensive. I think I'm way closer to buy a name like Palantir. You know, Palantir is putting up much faster growth. Yeah, literally heavy. I agree with you. I think that this name is as non-discretionary for the businesses that use them. They can't, even I thought that was so funny. Was it France, maybe? One of these countries that said, hey, we're going to use a little bit of a homegrown system. And this got the market all stirred up that there was a large government that might be moving away from Palantir. But one of the things that they ended up saying was, we're only going to do this switch whenever the capabilities of this new solution that we're using can reach what's happening on Palantir. Okay, so you might not ever switch? Is that what I'm hearing? Like, it's not like Palantir is standing still and then you're letting your competitors catch up to them. It's that same level of execution that's got them to grow at 85% and potentially into, triple digits, that hopefully will likely keep them ahead of their competitors going forward as well. I don't know that to be certain. I don't think anyone does. So the few times that you should look back in history is to say, hey, what's the chances that this continues into the future? And Palantir looks likely. All of their growth is happening because of AI, not in spite of it, not risking some sort of flip in their business. Like I think the growth is unreal. The margins are insane. Like the step up in margin quarter over quarter from last year to Q1 of 2026, phenomenal. Yeah, it's just, whenever I take a look at a fundamentally strong business, I don't know if you can pick a stronger name than Palantir. For real. For real. Zero debt, $8 billion in cash, working with the most solvent businesses in the world. And the net dollar retention is 150+%. The other companies that you can point to that have high net dollar retentions like that, a lot of the times that's in payments. Payment companies like Stripe, ADYEN, dLocal, and these sort of companies can point to net dollar retentions that are extremely high for certain areas of their business, but it's usually because of pricing wars. The larger you get with a customer, the lower your fees end up going. And there's been a massive, this is another thing in the payment space that's sort of killed the business. Across the board, ADYEN, dLocal, PayPal, as time has gone on, there's been a big competition of like a who can get to zero the fastest. You don't really want that, In the advertising space, and this is why I've been loving the advertising space recently, it looks like they're all fighting for higher and higher prices because, conversion is going up. So they're not competing. They're all benefiting. Like Google charges more than ever. Meta charges more than ever. Reddit charges more than ever. Amazon charges more than ever. That's what you want to see. Like what a great business. Payments, you're not really seeing that. So where was I going? Palantir, in terms of their pricing, it's going up and net dollar retention's going up. Having both of those happen in tandem, rare. That's rare. Claude is still the king. Is this in reference to what I'm talking about? The microphone doesn't work, but who cares? Yeah. I still remember he's talking in this one mic. He's handed one mic and then another mic. He's talking into 3 different mics. Whatever happens, you got to hear Alex Karp speak. What do you think about Microsoft at this price? I love it. I think Microsoft's definitely a buy for me. It makes a lot of sense for me. Did you see OpenAI's leaked financials? Yes, we were talking about that in the member-only stream before. I don't think the information, like the actual source that leaked all of this, will let me show you, like share my screen. I do share my screen in the members only because it's not monetized and they're not going to pull me down, and you know it's for a much, much smaller audience. So if you guys are interested in that, consider joining. But for the numbers, I'll just read them out loud. OpenAI ended their quarter with more than $73 billion in cash, marketable securities, compared to cash and marketable securities, compared to $40 billion at the end of December. That was due to their major, like $120 billion funding round. So you can see how much they've gone actually down comparatively to how much they've raised. In the same breath, the company said that they are going to burn $25 billion this year. This is what they had projected a while ago. And then $57 billion the year after. $57 billion. They want to burn, not spend, burn, like past how much they make, more than what like CoreWeave is worth today. Okay. Kevin Warsh doesn't speak in 2 hours. He speaks in 45 minutes. They also said that OpenAI told shareholders that it estimates $665 billion in spending commitments were made at the end of 2025, stretching out through 2030. $665 billion. That's like the entire backlog of Oracle from one company. OpenAI reported a net loss of more than $21.3 billion in the first quarter, but that was skewed from an accounting charge of nearly $12.4 billion, reflecting a change in fair value of convertible interest rates and warrant liabilities related to equity issued to investors in the creation of the OpenAI Foundation. Regardless, the OpenAI's first quarter operating loss was $9.3 billion, which included more than $2.3 billion in share-based compensation expense for employees. $2.3 billion in share-based compensation expense for employees, and that's before they go public. That's incredible. Yeah, Fed decision is in 15 minutes. Kevin Warsh speaks in 45. Okay. Yeah, new Fed, usually pretty bearish for markets. Bond markets, equity markets, be pretty jittery. That's why I think the markets are a little bit, down 0.1% on the S&P. NASDAQ's flat on the day. It's pretty good comparatively. Is that the best you got? Adrian, that's what the market's saying. Kevin. It's Kevin. Hey, Kevin, I didn't hear no bell. I didn't hear no market close. I'll get there. We're workshopping the Rocky / market Kevin Warsh accent, but we'll get there. Compared to what? Compared to past times that we've had Feds, that new Fed chairs that have come on, the market's been pretty shaky. One word to describe SoFi? Bank. No. I don't know. Noto. Will the market pump or dump after Kevin's speech? Well, I don't have a prediction there. You know, I might as well be putting it on white or red or black. I've got no clue. I'm not going to make any short-term bets or something like this. I'm holding my entire portfolio through this moment. I'm not going to trim before he speaks. But I think the market is pretty tentative on what's going to happen. So we have, like, if we take a look here, the chance of a no rate change, and the guy in chat that bet his account on us getting a rate hike, the chance or the chance of getting a rate cut, the chance of a rate cut right now is 0.0%. The chance of a no change is 99.6%, and then the chance of a rate hike is 0.4%. Now, what I will tell you is that the market is betting on, you know, where we're going to lean towards. So if, for example, we end up seeing a rate cut or a rate hike, the market will be extremely surprised by that announcement. Extremely. Because there's a 0.0% chance of that happening. So if somehow it does, and Kevin Warsh just tells the entire committee to vote a certain way, and, you know, he wants to make sure that people are happy, then the markets will rocket on a rate hike, and they could take quite a steep step down today on a rate hike. Rate ease, rate cut, good. Rate hike, generally bad. Doesn't necessarily mean bad at all times. It's got to be for what reason, what purpose. Generally speaking, though, rate cuts can be a little bit of like adding fuel to a fire. We don't need a hike or a cut at this time. I also think I'll be perfectly okay with even going through this entire year with no rate cuts. I'd be perfectly happy. You know, it's the hikes that concern me, but oil's coming down. You know, let's go ahead and take a look. Oil price is now $76 a barrel. It's not perfect, not yet. But is that better than $104 a barrel oil that we saw very recently? We almost saw 100, what is this? 108.91 in the month, in the last month, guys. That is steep. Now, I'm not even sure if we have a deal. I think Trump said that they have, what was his exact wording? We have a memorandum of, oh, what was the exact word? I'm going to try to find it. I thought it was very funny how he said it. Where was this memorandum comment? Iran has been acting very appropriately. Yeah. Trump says we have a memorandum of understanding with Iran, and things should get done in the next 60 days. Well, I own properties. I need a rate cut bad. I feel that. You'll see higher barrels of oil this year if Israel kills the peace deal. Yeah, I don't know. I'm going to enjoy this moment of peace. Trump shouldn't have gotten involved in the first place. And we can keep that oil flowing. Good for markets. Let's go ahead and look at the markets for the next 9 minutes, and then I will have the news come out. What we can also do is watch CNBC. That way we get it perfectly on time. They might even get it ahead of me, because sometimes I've been refreshing that Fed website, and it's not been always as fast as I'd want it to be. Nebius to the moon. What happened to Nebius? 289.50. 289.50. But do you put Nebius in the stock draft, essentially saying like this is going to greatly outperform the S&P 500 over the next year period, with like a specific day where you have to sell, like that your thing will be marked? ASML is crushing it. You know what's so funny? ASML, I was looking at this for the stock draft, because this is in my stock draft. This was the price that it was recorded for the stock draft at the end of the year. It's 1,800. So it like was doing so well, loses all that run. It gets recorded here and then runs back up literally immediately after they recorded it for my stock draft. I'm telling you, I'm cursed. Like, but if I could impose any sort of rule, and I think that this is fair, if you picked these stocks the first year, you should have first right of refusal to run those same stocks the next year. Because I love my portfolio a lot, and it wasn't great on timing for Nubank, Mercado Libre, even ASML and TSM. It, did not nearly do as well as the other semi names, but I have a lot of faith in those companies. So yeah, I still believe in the semis. I still believe in LATAM. The trade desk I would dump. I hated that company immediately. But yeah, I know Amit's taking NVIDIA and all of this stuff, fully aware. I'll have to play it a little bit differently this time. But that's all I'm saying. Like, I'm going to get ragged on not only for being last, and then everyone's going to pick my stocks because I wasn't wrong on the names. I was wrong on the time. And yeah, it's just fun. It's going to be a pick of the litter of all my favorite companies. Please take SoFi this time. I will. I'll see what I can do. But I've got a plan, and I get to pick this the fifth. Oh, well, Jason's here now. I don't actually know how it works with Jason. We'll have to see what the order does with Jason. That said, I thought I was going to be able to pick two companies side by side, and I've got a plan. S&P is flipping green. We've got Fed decision coming out in 5 minutes. Get ready, ladies and gentlemen. I will end up sharing CNBC. They can go through some of the numbers, the biases, some of the words that have changed in this report versus last. That way you guys don't have to hear me stuttering and reading over the report. And then we will get to the actual call 30 minutes after this. The market is almost 100% betting on a chance of no rate change, 99.6% chance, no rate hike, no rate cut, with a 0.4% chance of a rate hike. So if it is leaning one direction, it looks just slightly more leaning to the hike this time. But honest, it's 0.4%. It's going to be a no move. The real question is, what color tie will Kevin wear? Yeah. What color tie? Will he say good afternoon? Not sure. FYI, on your thing of picking two stocks back to back, I don't think Steve is planning on the snake style draft. No, they definitely are. That's how we did it last year. I confirmed that with Steve. We are. It's just a matter of, Jason, I think, is now involved. And so where does he go in that draft? It is not snake. You guys are going to make me call, and we got 2 minutes left. Sorry. Jeez. Okay. Okay, we got 2 minutes till the announcement. I'm calling a buddy.
What do you want, my love?
How does this work on the draft now that Jason's here?
Jason's going sixth. He's going after you because he's the new guy.
So he gets to pick two in a row.
No.
What do you mean no?
Oh my God, Tanner.
He gets sixth and seventh pick, and I get eighth pick.
Are you that dumb?
What are you talking about? That's how we did it last year. Are you saying that Amit gets to go seventh?
Yes, that's exactly what I'm saying.
That is absolutely not happening. That is absolutely not happening. No. Nope. Nope. That's not happening. How does that make any sense? He said, "Are you that dumb?" We talked about it the other week. He made it concrete. I have the recording. Let's go ahead and listen to CNBC before I blow steam out of my ears. Okay.
I think that's going to be his message today.
Francis? I think today's all about style. How does he bring consensus? How does he bring credibility to the narrative? What are the sort of breadcrumbs that we see about how his style is going to evolve? But honorable mention, I want to hear what Kevin Warsh has to say about inflation. I agree with Claudia Sam here. Kevin Warsh and the American people have an inflation problem, and it needs to be addressed. I don't think he can get through today without talking about inflation.
Claudia? Yeah, no, and I think while he's going to want to be building consensus, there's been a lot of disagreement among committee members. There's been a lot more discussion about the possibility that a rate hike might be appropriate later this year. And while, he shouldn't be signaling the future, just like, what are people looking for? What is that debate? Like, really put it out there and let us understand what the committee members are looking for in the data and what they think is happening with inflation.
I don't know. Francis, Kevin Warsh is pretty critical of the Federal Reserve and its balance sheet. Now he's the chairman. He can actually do something about it. Does he?
Well, there are 12 voting members on the Federal Reserve, so he's got to convince 11 other members to move to his direction. This is a Kevin Warsh story, but it's not entirely a Kevin Warsh story. The data determines how the Federal Reserve moves. The rest of the voting members determine how the Federal Reserve moves. So yes, today is a monumental day. We're going to find out what the next 4 years look like in terms of style, but it's not everything.
Quick word, David.
Yeah, no, I think that's right. But I think the style is going to be important here, and I think he will try to avoid really signaling where he's going from here. He can't do anything about the balance sheet in the short run. That's a long-term project, and there are no easy choices. You know, do you want to push up mortgage rates? You want to push up long-term interest rates? That's what happens if you reduce the asset side of that balance sheet. He doesn't want to be responsible for that right now.
Well, let's find out what kind of style and words that he uses, because it's happening all now. Steve Leisman with the Fed's call on rates.
The Federal Reserve in the first meeting under new chair Chairman Kevin Warsh, keeping rates unchanged in unanimous vote of 12-0. The statement, by the way, has been dramatically shortened to 4 quick paragraphs. It's about a third of the length of the prior statement. The easing bias was dropped as expected. From the prior statement, the Fed reaffirms its policy, really answering David Kelly right there, of maintaining ample reserves. So no discussion really about changing the balance sheet, at least not at this point. Economic activity is said to be expanding at a solid pace despite elevated uncertainty, the uncertainty linked to the conflict in the Middle East. They're noting strong productivity growth and capital investment. Job gains have kept pace with the workforce, the statement says. Inflation remains elevated relative to the 2% goal, reflecting the supply shocks that are out there. And then it ends with the simple declarative statement: the committee will deliver price stability. On to the forecast, where there's a lot more interesting things going on. And what is happening there, first of all, only 18 of 19 officials submitted projections. Does raise the question about whether Warsh did not submit one, as has been widely speculated on Wall Street. We do not know if the person who did not submit was Kevin Warsh. There was a sharp upgrade in the funds rate projections. 9 officials now projecting a rate hike this year. 5 of them see 2 hikes this year. 1 sees 3 hikes. However, 8 are projecting the Fed to hold. 1 sees a cut. So the funds rate averages out to 3.8 from 3.4 from the prior forecast. A really divided Fed on this issue. On average, rates are seen at the current level of 3.62 next year, declining eventually to the neutral rate, which remains unchanged at 3.1. There was a sharp upgrade in both core and headline PCE inflation forecasts to 3.6 from 2.7 this year on headline, and from 2.7 to 3.3 on core. The core remains elevated next year. That might be important at 2.5%. So I'm recapping here. A unanimous vote, a much shorter statement, no forward guidance in the statement. They removed a lot of the vestigial stuff from the statement that was really, my opinion, kind of worthless about how the Fed will make its decisions. And they also show a divided committee when it comes to the outlook on rates. Brian, back to you.
This statement is so short, it's practically a tweet. I mean, this entire statement is 1 sentence, then 2 sentences, then 2 more sentences, then another, and then it ends. I mean, this is the shortest. Steve, this is the shortest Fed statement. This almost looks like a news alert.
Well, it almost looks like a Greenspan statement, if you really want to know. I did a calculation. I don't have it in front of me, but the statement number of words went like this, came down under Powell, but has now come down much more to kind of where Greenspan was. Simple declarative statements. They took out a lot of stuff that didn't need to be there. There's this thing that they would put things into the statement, Kelly, when they needed to put it in to get somebody to vote for the statement, and then it would just stay there for no reason at all. A lot of that stuff's gone. But what's interesting is that there is no forward guidance in this statement about which way rates are headed. That's the important missing sentence. That is something we're going to have to deal with and figure out. Maybe we'll get some more guidance or not at the press conference.
Fair enough. And maybe we will. Let's hope we do. Steve, stick.
Okay. We will keep that up over the next 30 minutes or 25 minutes. Kevin Warsh will speak after that. Take a look at how different this report is, however, from the last, like Steve Leisman just said. The previous red scratched out text was the changes, what they would do from meeting to meeting, essentially month to month. Okay. This time they kept this wording in here and then added this sentence, cut out everything else, kept this, and then almost all of this is completely cut out with some parts of it being added in completely new. It's almost entirely cut out. Now, the market is selling off, I think, due to a few things. There definitely was not the most bullish signs here. 9 out of 18 FOMC participants ended up looking for rate hikes in 2026. The Fed lowered their median 2026 GDP projections to 2.2% from 2.4%. That's also not good. We take a look at this minute chart here. The SPY is dropping down 0.83% now, 0.85, continuing to fall. Let me see if I can get some more information here. Yeah, very, very hawkish dot plot here. Only one person has a cut this year, and one participant, presumably Warsh, did not submit an SEP there as well. Oh, wow. Yeah, that's why the market's having this guttural reaction. But it's so short that people really can't even go through this. Like, that's almost all the information right there. Fed lowered its median U.S. GDP projections. Fed now sees their PCE inflation not returning to the 2% target until 2028. Fed says inflation remaining elevated is going to essentially remain that way, even though that's not necessarily their goal. And the change, like the decision to not have a rate cut was the fourth time in a row, fourth straight meeting of no rate change at all. And that was a unanimous decision, 12-0 vote. Okay. So let's go ahead and hear what CNBC has going on right now and see what they have to say.
You look at a 2-year prior to the statement, we're at 405, so we're at 414. The high watermark on a closing basis is 416. We haven't challenged that yet. If you look at the 10-year prior to the statement, it was 444. Now we're at 446. Couple of basis points. We were at right around 442. So now we're at 446. The high watermark there is well above where we're trading. It's 467. That was from the 19th of May. The dollar index did the same thing. It jumped, but then it came back down a bit. And I think that's interesting. So, yes, it jumped, not huge, didn't quite make it to 100 where it's hovering, big psychological level. I will point out the dollar is significantly higher than pre-Middle East conflict, and that is something to pay attention to. But I think to summarize, listen, I think Mr. Warsh is definitely going to have to cut his teeth and make his mark on history. All of that's quite important. But the reality of the situation is the economy's doing pretty good. We're really never near 2% inflation before the conflict. Post-conflict, we're going to have to deal with how the markets move, how the energy complex prices before they can weigh in on it. And as the panel has duly noted, that the Fed needs to act to data-based information. So what the dot plots say are building in a couple tightenings by some of the members towards the end of the year. It's all interesting chatter around the water cooler, but in the end, it's not really what the market's going to be looking at tomorrow.
Interesting to see the dollar flirting with the 100 level there, which is significant. Again, if it stays there, if what we think we know now is reinforced, I guess we should put it by the data. That is a big deal. We're heading back towards some multi-year highs. Rick, thanks. We appreciate it, Rick Santelli.
Thank you.
Want to just turn back to our panel now. David Kelly, what are your thoughts?
Well, it was mostly as expected, except that dot plot is a little on the hawkish side. And I actually think the data is not going to support a rate hike this year. Because the key thing is, in May, we had 4.2% of CPI inflation. I think that's the peak. We're down about, I think gasoline prices are going to be down about 8% this month relative to last month. That's going to bring the year over year down to 3.9. We've got the highest rental vacancy rate in 8 years. And so the big chunk of the CPI is overstating inflation in the shelter sector. I think that's going to come down. I think tariff rates overall are coming down. We're past the high water mark in that. We're not seeing wages accelerate here. So I put all of these pieces together, and it tells me that inflation, it'll be coming down. It'll be coming down slowly, and maybe more slowly than people would like, but it'll be coming down anyway. And in that environment, do you really want to poke the bear by raising rates now and being responsible for maybe triggering an overreaction in the economy? So my guess is the Fed may talk about the possibility of rate hike. In the end, I don't think they're going to deliver one.
Ever?
Maybe at some stage, but I think there's a good possibility that if you have a divided Congress going into next year, then fiscal stimulus goes away, and actually growth and inflation could both spend some time below 2% at some stage next year. So I think that for this cycle, we may have seen the peak in inflation. We may still have seen the peak in rates.
So Steve Leishman, okay, so I want to go back to the headlines. 18 of the 19 Fed officials submitting that dot for their summary of economic projections. Do you think we'll ever find out if it is Kevin Warsh? I mean, is there a chance at the press conference, maybe Steve Leishman will ask him, who knows? Was it you that left out your dot? Because again, while one of 19, if you're the chairman, that's a pretty big dot.
Yeah, I don't know, Brian, if that's the most important question to ask, but it is an important one, I guess. I'll have to think about that. What I did want to report, Brian, is that I'm looking at initial flows here, really responding to what David Kelly was talking about and how the market thinks about this. I'm looking at a 69% probability of a rate hike in September. And then I see a nearly 78% probability of one in December. So the market reacting very quickly to this. And it may be that David Kelly is right, that the Fed can threaten or jawbone the market to thinking rate hikes are coming and then not having to deliver. But right now, the way the market is trading, and I mean, just look at the 2-year, David. The 2-year is telling you and has told you for a very long time that rates are likely to be higher than they are, much more likely to be higher than they are to be lower. At 414, you know, you're talking about a 362 on the Fed funds rate. So there's quite a slope there.
It's a close call, but we've seen oil prices come down below 80. I think the administration is going to do everything it can to pump oil into the global economy, and that's going to bring down U.S. inflation. So again, it's going to take a lot of nerve in the Federal Reserve to actually raise rates into a declining inflation environment later on this year. If that's what we have.
I feel like, Claudia, we've been saying rate cut because the president's been saying it. I think we have to stop that conversation, because if I'm looking out to the CME's FedWatch tool, and again, just projections, this could change. For the December meeting, what Steve Leishman just referenced, 39% chance that rates stay where they are right now, 43% chance they go up by 1/4%. And here's what's amazing. 15% chance that in December, rates are 0.5% higher than they are now. Higher. We got to kill the rate cut conversation. It's over.
But I think the inflation.
This is no joke in terms of what they're talking about here. If we were to go to CME Group, like they said, and this is right now, it's updating quickly, so I'll try to keep it updated as well. The December 2026 chance of a rate hike is by far the highest it's been. So what killed companies like SoFi and these sort of businesses earlier was the chance of a rate hike, had gone to like 70%. We're now sitting at the end of the year at 75.7%. Okay. So there's a lot of businesses that would love rate cuts, or for rates to stay unchanged. You're looking at the new home builders. They would want mortgages to get into a better place. That way they can, really refire on their business. Lenders, obviously, especially on the selling side of those loans, not just the asset managers and the hedge funds and stuff like this that want to hold those loans to maturity, but the ones that are holding those loans for sale. Rate hikes can be very good to potentially take those old cohort of loans and get them at a very good price for sale. So this is very interesting. Chance of an ease this year right now, as CME has it, 0%, no change 24%, and then a rate hike 75%. Let me go ahead and refresh this really quick. See if that has remained the same. It has, and we will go ahead and move on. Okay, let's go ahead and share the market right now. S&P 500 is recovering, only down 0.4% now. That's a way better reaction than where we were, almost down 0.9 just a little bit ago. So I'll continue to watch this. We have 15 minutes until we end up seeing Kevin Warsh come on to do his first meet. That's extremely exciting. Someone's saying shorting Nebius. What's happening with Nebius stock? 290. I don't know, man. Their growth has been quite exceptional. Maybe they're worth it. T1 Energy, 12.8%. Robinhood up 12%, still 108. That's looking great for that company right now. Let's see what else. Air Test Systems up 11%. Nebius still up nearly 10%. Vertiv up 8.4%. Let's continue down. Let's see what's not working today. Carvana down 8.4%. Root down 7.5%. Elf Beauty down 5.2%. DraftKings down 4.4% on the day. You could see that Fed decision and really a lot of the commentary talking about how they're leaning into potential rate hikes is really what's not doing these companies any favors. AppLovin took it in stride, coming back, however, down still 3.5%. For the Mag 7s, we're talking big tech companies here. NVIDIA is down 0.4%, Tesla down 0.4%, Apple down almost 1%, Google down almost 2%, 1.9%, Amazon down 2.5%, Microsoft down 2.5%, and Meta down 3.7%. Unbelievable. I'm curious to see what names like CoreWeave, they're almost $120. Way better. I feel much better sitting at 120 than I was sitting at 91. Oracle, where are these names at? They have a ton of debt on the balance sheet. 187. Not bad. Will rate hikes cause the AI bubble to burst? I mean, I'm not sure. I definitely don't think so. But what I would say is that obviously, even a quarter point increase, if you have taken out the wrong set of loans, is going to increase your carrying cost on that debt. If that happens, it can change the financials that many of these businesses have done so far. The Mag 7, for the most part, don't care. I mean, these are still extremely cash-heavy businesses. I think it's more for the companies, the Oracles and the CoreWeaves are the ones that you just have to watch a little bit more carefully to make sure that, you know, the margins don't get killed. Okay. Now, let's continue here. Any news stories? We've got the FOMC statement that people are passing around online. Already showed that off. It looks fine. Kalshi now has a chance of a rate hike in 2026 at 52%. Large jump up from 30% before that report came out. So that just jumped up 22%, 52 from 30. That's a pretty big move. Let's see. What tie is this guy going to wear? Neoclouds can't wait for lower rates and to refinance some of that debt. That will be a big, potential good story, but they can wait. Like they're profitable even without it. In terms of, the actual monetization bridge, they can actually put up good numbers. The only thing that's going to kill their profitability going forward is depreciation. They've got a ton of chips. Those chips are depreciating. That's going to kill it. Genuine question, what stocks do well or even benefit from rate hikes? There's aspects of companies that do well during rate hikes, financials for sure. Net interest income goes up. But I'm not sure. It really is designed to slow the economy down a little bit. I'd have to think about it. Okay. Let's see. Does it help SoFi? No, not really, because they are selling a ton of loans. They don't really want to hold their loans to maturity, so they're not worried about the new loans that they write having higher coupon rates. They want to sell loans and then issue new originations. Why does the Fed want to slow the economy down? Doesn't a good economy mean more money? Yeah, but if the economy is going a little bit too fast and cause out of control inflation can get to a point where you kind of fall into hyperinflation, and then your currency is quickly devalued. So they are keeping us on the rails. You want growth, but you want sustainable growth. You don't want a couple of years' growth. Okay. Let's see here. Okay, so CNBC right now is on commercial break. We'll be jumping back over to CNBC for whenever Kevin Warsh comes on to speak. I'm honestly really excited. I shouldn't be this excited for an FOMC. I don't know whenever this happened in my life, whenever I became old. But a new Fed chair is freaking exciting regardless. Like, maybe it's scary to some, but either way, this level of change is, it's fun. We're going to watch Warsh live. Yep. Don't you worry. Let's go ahead and switch over to CNBC to see what they're saying and get some additional perspectives here.
On the initial reaction to the projections and also to the statement. So the S&P right now is down about 0.4%. Just a 38-point drop for the Dow. It could erase that. The Russells are already back in positive territory, and the 10-year is right around 445. On that note, here's how the bond market is reacting. Only a 2 basis point move higher right now in the 10s. Let's go back to the 2s, which would show kind of that more near-term what might the Fed do. That's still up about 8 basis points to 413. The dollar popped up to about 100 at last check, just a hair below that level. And gold also turned negative on the session today. And there it is, dropping about 0.75%. Now we can turn to the messaging from the new Fed chair. Of course, following the decision at the top of the hour, that's what investors are eagerly awaiting after that very short statement and the missing dot. Let's bring in Larry Adam, the Chief Investment Officer at Raymond James, and Brookings Senior Fellow David Wessel is back with us. Welcome to both of you. Larry, I'll start with you. What's your, if I didn't show you the market reaction, what would your reaction be?
I would say that this is why Kevin Warsh didn't want to put his dot in, right? Look how quickly you've seen these changes. We came into this looking for probably a hike this year. Now we're talking about 2 hikes this year, right? So,
but we came into the year looking for a cut.
That's what I'm
People
saying.
were hoping for a cut. Home buyers were hoping for a rate cut. They're hoping for an under 6% mortgage. And what happened today, and not today, but with the inflation story is that, guess what, folks? Mortgage rates aren't going down. If anything, they're probably going to go up.
Well, with your last speaker, David Kelly, I agree with him. You follow the energy markets. Think about this. Back in April, energy prices were up almost 90% year over year. As we sit here today, they're up 3.5% over where they were last year. So I think that inflation is going to start to come down, and that will be the catalyst. And that'll cause a lot of these minds to change on the Fed. Because I do think the broader spectrum of inflation is on a disinflationary trend when you think a little bit broader.
David, what do you think of the some of the theory and reaction we're getting is, he wanted to come out guns blazing to the committee on inflation to kind of cement his kind of, I'm going to put inflation first, you can trust me. But then to Larry's point, if things look a little bit better in a meeting or two, maybe we can start to bring back and pivot back more towards rate cuts.
The FOMC is pretty evenly divided here. And what will determine is not Kevin Warsh's charisma, but what happens to the economy. If inflation does come down, if the labor market softens, then they won't raise rates. But it's hard to tell. One point I think you haven't talked about yet is the sentence where they're reaffirming the policy of maintaining ample reserves in the banking system. That is not consistent with we're going to rush to shrink the balance sheet. So it'll be really interesting to hear how Kevin Warsh talks about the balance sheet, if he does, in the press conference.
And just to explain, as we're looking at bonds, the hawkishness of the statement is kind of mitigated by the lack of hawkishness on the balance sheet. It kind of
I don't think the
balances it out a little
statement is
bit.
as hawkish as the dots. The dots and the forecasts of higher core inflation, that's the hawkish part. What Kevin Warsh is trying to do with this statement is not use the statement to give forward guidance. And I think he did a pretty good job of that. He doesn't say which way the balance of risks are.
Yeah, but if the dot
But he's
plots are
he's stuck with the dots.
Yeah, but if the dots are the summary of economic projections, technically, if the dot plots don't align well with the statement, then the bond market's going to be confused. And what the bond market does not want to be is confused.
Right. Well, I feel sorry for the bond market. They're going to be confused. What I want to see is, what does Kevin Warsh do about the dots when he gives the press conference? Does he even talk about them?
And I think what we've seen so far has been an appetizer. I think the main event's going to be
absolutely
with the press conference. And I think you're going to be able to pick your poison, right? I think if you're a dove, he's probably going to talk about the fact that maybe we should look at other alternative metrics when it comes to inflation. I think he's going to talk about potentially AI and how longer term that's disinflationary. And as you said, though, the hawks are going to talk about the fact that maybe he does want to reduce the balance sheet longer term. So I think there's going to be a lot of things coming out during this upcoming press conference.
Well, I do wonder if Jerome Powell was very good to take all of the reporters' questions. Maybe not every one, but a lot of them. He would sit there and he would take questions from all the different news organizations. I wonder if this statement is some kind of a guide that maybe Warsh takes 2 questions and he's out. We don't know what to expect from this press conference. And now from this, I do wonder if it may be he's going to say, I am not Jerome Powell.
You have a lot of guts to predict something 4 minutes before it happens. But I think
that's what I've been told.
That's what I mean. I think the statement will be erased in the public and the market consciousness after the press conference, because the press conference is what we're going to get a sense of what Kevin Warsh really thinks.
And what does the market want to hear,
I think
Larry?
he'll want them to he'll leave them wanting more. I think that's part of this, right? You don't want that forward guidance to be locked down. You want to leave some questions, let the market interpret it later on over time.
And were you saying you don't think he wants, so let's say he's asked point blank, was your dot the missing dot? Was your projection the missing one? And the reason why we're asking this, all the projections for inflation, they moved higher, but his might have been an outlier to the downside. You don't think he'd want to answer that question?
I think he will answer that question because that's one of his primary things. He does want to change some of the communication. And by the way, he's not alone. I mean, even Fed Chairman Powell said, you know what, these are stale as soon as they're in paper.
The question he won't answer is, if you had put in a dot, what would it have been? He won't answer that one.
So he won't tip his hand if he himself is inclined one way or the other.
No, I agree with that. And I do think, again, there's been plenty of people that have talked about this. And I think that we're likely going to see. I think the question is at the Fed, is it what are you going to replace it with?
Exactly.
Right? That's the thing that they really have to come up with.
Okay, we've got a little bit left before the actual like video with Kevin Warsh, the meeting, the questions. I think they're correct. This is what it's all going to come down to. This is what people are going to care about. I'm super excited. We'll see what he has to say. They did also remind me, he is super, super bullish on artificial intelligence. And I'm curious to know what his thoughts are, how this is going to affect the economy, and then also how this is going to affect how investors and traders think about artificial intelligence companies, knowing that, the Fed is watching quite closely. There's been a couple times during JPow's, run that he had made some comments of certain sectors, and then those sectors have sort of seen quite bullish moves due to his commentary. I'm interested to know how Kevin Warsh talking about artificial intelligence, which is likely to happen, will come true. He's bullish crypto for sure. He's bullish crypto. He's a young man, But we need to talk about JBN here. If I'm not mistaken, this was the banner mod individual. Let's see what his comments were. Did you say anything about, he said, here we go, and then nothing. Brother, I'll let you live this time, but we absolutely did not do a rate hike. Or, sorry, a rate cut, I think is the side that you were betting on. I got my finger ready. Yeah, Staples got mod powers on YouTube. Okay. I'm staring at the podium. I'll switch over. The press release, it could be right now. Okay, he's walking up. Let's listen. Enjoy, everyone.
New Fed Chair Kevin Warsh.
Good day. It's an honor, a true honor to be back at the Federal Reserve and to take up this duty at a time of such consequence. I've been especially heartened by the warm welcome of old friends and new colleagues both. And I've listened closely to my fellow FOMC members, heard a lot of new ideas, new thinking, and genuine interest in moving the Fed forward. This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded. As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5 to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system. Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East. Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something: a difference in today's policy statement. It's a bit shorter, a bit simpler, and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own, consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Howard Schneider.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end. Hopefully most, if not all of them, concluding by year end.
And just specifically on the inflation framework, you talk about first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is, what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll overlap with my data group. On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point.
Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we have reestablished our commitment and ability to deliver on the 2% inflation objective to revisit that. So that'll be outside the scope of what we're taking on.
Colby.
Thank you so much. Colby Smith with the New York Times. You've in the past said that inflation is a choice, and in the policy statement, it includes this pledge to deliver price stability, as you've reiterated today. But looking at the SEP, the bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to wash through and for underlying inflation to step down after so many years of inflation running above target, and under what circumstances you would support the Fed taking some action and raising rates.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%. That's exactly what we're going to do. In the Fed's review of its strategy over the last any number of years, in January, the Fed, including the strategy that we're still bound by, the Fed statement says that inflation is primarily determined by monetary policy. You bet it is. I've said for years inflation is a choice. You bet it is. And today I'm announcing that this committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like a encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment, given the flow of data that we've seen and, forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that. I'll give you my own. It's uneven. If I look at the housing markets as one example, Fed policy isn't the single determinant of the state of the housing market, but broadly I would say Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's uneven. That's perhaps a function of different transmission mechanisms of monetary policy, whether monetary policy is coming from our interest rate tool or our balance sheet tool. But the good news, we have a task force on that too, and the balance sheet task force will be looking more at that subject.
Mike McKee.
You've said you don't like forward guidance. You dropped it from the statement this time, but with the dot plot, 9 members suggested that they want a rate increase by the end of the year, and the markets have taken that as forward guidance. So what does this mean in terms of how you guide the markets and in terms of what the dot plot's future is?
I'm going to have to give you the same answer I gave to Ms. Smith. We've got a task force for that. I'll give you a little bit more. I reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils, those kinds with the big erasers. That's to say that I think my colleagues around the table, when they submitted their dots, understand the world is changing quite quickly. And they didn't feel bound by them 6 weeks from now or 6 days from now in the event that their circumstances change. I'll note a couple other things. What I heard around the table was, as they submitted their modal forecasts, to be clear, this was more likely than not. This was more likely than their other scenarios. So I didn't hear tons of conviction. What I heard was the kind of humility that I think we should have. I did not submit a dot. For me, it's not helpful in the conduct of policy. I suspect by year end, as I mentioned in my opening statements, there'll be a review about communications broadly, press conferences, dots, meetings and the like, transcripts, minutes. This will be part of that. I don't want to prejudge the outcomes there, but I'm pretty open-minded about what they could be. And I was just incredibly impressed over the last couple of days. My colleagues over the last 2 days, and frankly, over the first 3 weeks I've been here, they've been very open about changes. Change isn't easy, change is filled with risk, but our number one goal is to get monetary policy right. The way to get monetary policy right is to deliver on the remit that Congress gave us, to deliver on price stability. And there was no disagreement on any of those points.
At the risk of possibly getting the same answer about task forces, communications, what is your feeling about these news conferences? Are you going to continue one after every meeting? Do you find them useful? What is the future for the way Kevin Warsh will communicate?
Well, this one's probably got another 15 or 20 minutes in it, so I don't want to prejudge the outcome. Press conferences can be a very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful, but when you have one, you want to make sure you have something important to say. Today, I think we had something important to say about our commitment to deliver on price stability, our commitment to rethink practices with an eye of moving the Fed forward, and to give you and the American people a sense that these aren't idle thoughts, these are concrete thoughts, that we're going to seek out the best minds, both the best thinking inside of the Federal Reserve and the best people I know in business and economics and the academy and technology and the rest to share their views. That's what we're going to be doing here, the pursuit of truth. I think we're going to come up with some new and interesting things. We made some changes today. I expect more changes to come. And some of those might well be worthy of a press conference.
Hi, Chris Rugaber at Associated Press. Thanks for taking our questions. Could you give us a sense of how you see inflation more in the long term? I know you may not want to comment on the ups and downs, but is this mainly driven by energy prices in the Iran war at this point, or do you have any concerns about underlying inflation pressures in the economy? Thank you.
So I can't do much better than the committee just did. So let me restate it. Inflation remains elevated relative to the committee's 2% goal, in part reflecting supply shocks that have driven price increases in certain sectors, including energy. The paragraph goes on to say, but to be clear, the Fed will deliver price stability. My own judgment is the committee spent quite a bit of time, not just in 2 days, but over iterations of a couple of weeks. That's what we're prepared to say about inflation, but the commitment to deliver is strong, unanimous, and unambiguous. And that's, I think, an important message. We've missed for 5 years, and we're going to fix that.
Well, great. And then just on the data task force and everything else, I mean, generally speaking, I think people feel the Fed looks at everything already. Certainly that was the sense from before. Is there data that you feel is not given enough weight? I mean, you mentioned the trim to mean in the past, but again, that's well known to certainly most Fed members. So what is that task force looking at, and what might be I mean, I know you don't want to prejudge the outcome, but are there examples of data that you expect might be given more weight? Thank you.
So you're answering my question. So let me say, I don't want to prejudge the outcome. I also don't want to say too much about what they're going to do because I still have a phone call or two to make before I've nailed down the people that are doing that. I'm interested in what the outside experts' view is on the subject. I'll say this generally. Most of the data that central bankers and other government officials in the United States consume come with old-fashioned survey methods, national accounts of what the U.S. economy looks like that looks very little like the U.S. economy in 2026. Survey methods that don't have response rates that we need, asking questions that might have been quite applicable a generation ago that are less applicable now. So even inside of official statistics, I would be open-minded if the task force and our own best thinking had recommendations how those official statistics can be brought up to a standard of of our time using new analytic methods. I'd also say this, almost every private company CEO that's running his or her business are doing so with real-time information that isn't subject to much revision, that is telling them what just happened at that very moment. As you know, there are normal, long and variable lags in the conduct of monetary policy. What we're really interested in is what's happening right now. What we're less interested in is echoes of history. And you're hearing from my answer that some of the data that we receive, that we're waiting on, the first Friday after the month, the payroll index or something else, that might be an echo of history that's quite useful on its third revision. We need to take those error bounds down because we have to make hard decisions in real time. I'm really open-minded that there is a lot of new data sources that we can learn from the private sector, from reforms in the official sector, and new analytic techniques that are far more refined than asking a simple question about whether something was core or non-core.
Edward.
Thanks. Welcome, Mr. Chairman. Edward Lawrence with Fox Business. So if you don't give a lot of ongoing forward guidance, won't the markets have more volatility, and shouldn't Americans have more access into what you're thinking going forward?
So I think financial markets perform best when they react to incoming data. I think the financial markets work less efficiently when they ask a question, how will the Federal Reserve react to that incoming information? The more that markets are paying attention to what's happening in the real economy, deciding what's good data and what's less good data, the more financial markets can price what they believe is the most likely and what are the tail risks. Financial market prices are probably the most important source of information to guide central bankers. But when all the financial markets are doing is reflecting back what we've said, then we're taking the most important source of information and we're being blind to it. I'd like us to create a system where those blinders come off, where markets are following data that they efficiently think is reliable, and they'll be watching data, we'll be watching data. They'll come with better information through market prices to us. We can make more informed decisions. But ultimately, the goal that I said at the outset, deliver on the price stability objective that Congress told us to do, and that we've got to get in the business of doing.
Yeah, if I could take you in the meeting a little bit. This is your first meeting. The board members seem fairly hawkish when you listen to, in general, when you listen to what they're saying. Was there any discussion of a rate cut going forward today?
There was one proposal on the table. There was no discussion of any other proposals. The discussion on that proposal, I would say, was quite limited. The group was unanimous and unambiguous on it. It has been the practice of this central bank and others to have a range of alternatives. Today we had one. I thought it furthered discussion, deepened it, and made it clear what we needed to do and how we need to deliver. I wouldn't prejudge what happens in the future, but there was only one big subject for us. We took it on. We had a good family fight on it for a couple of days, and we ended up, I think, in a better place.
Claire.
Thanks a lot, Claire Jones, Financial Times. Coming to this blind, reading this very nice short statement that I think we've all appreciated in the room, one might wonder why you didn't raise rates today, considering what you're saying here about the risks to US inflation and your mandate. I guess, why not, and what would you need to see in order to get to that place? And secondly, on your task forces, are there any best practices at other central banks that you'd consider looking at? Thank you.
Yeah. I'm glad they're in the practice of giving you two questions, because my answer to your first question was going to be very curt. I've got nothing more to say than the statement itself. And to the point of the question I got before, market reactions to what we say unfiltered, I think is more helpful than having delivered a statement, me then improvising further upon it. Best practices of task forces. This is a subject I've thought some about. I've been on a task force or two in my life. Best practice, find the best minds. Ensure that the task forces have a range of people, both by backgrounds and predispositions. So they too can have a bit of a family fight. Make sure when you establish a task force that the group that's going to be the recipient of the information feels as though they've got some equities in it too. That's why we're looking for, haven't done the final roll call, some of the most significant talent we have in the building and across the reserve banks on each of these, and in some sense seconding them to this group for a period of some number of months, so that the leaders of the task force know what the most analytical central bank in the world thinks about that. They can reflect on it. And a final best practice, we're not outsourcing decisions to anybody. Administrations past and present, reserve banks have chosen a group of 19 people around the table. These will be our decisions. We can agree to some of the recommendations, disagree with others, have a good family fight about it. But what comes from them will, I hope and believe, make the discussion we have internally better, stronger, more of a dialectic, so that we can finally deliver on that price stability objective.
Just a quick follow-up on your markets point. If you look at 2-year yields, they're really suggesting that markets think more tightening is needed. Would that be your read on what the 2-year yield is saying as well?
We were in such a good place. This is why we don't do third questions, I presume. I'm not going to offer any commentary on market reaction over the last 30 or 60 minutes. What we've given markets is a new chapter for the central bank, some fresh thinking. What we've given markets and households and businesses, I think, is a commitment to ask ourselves hard questions such that we can deliver on the promises that we've made before. This is a lot of change for financial markets to digest. I wouldn't be particularly intrigued by how they react in the first several minutes or even first several days. What I think is most important is that financial markets, and at least as important, households and businesses know that this central bank will deliver on price stability.
Hi, Chairman Warsh. Brian Chung with NBC News. Thank you for taking our questions. So when you say that we've dropped forward guidance for the layperson, that might sound like the Fed's going to say less or offer less insight into where their borrowing costs might go. So for the person that maybe you might run into at the grocery store, where the price tags are rising at a faster pace than their wages at the moment, how would you explain it to them? I don't know if task force might be the answer there, but how would you kind of communicate this era, this chapter of the Fed?
If I told somebody in the milk aisle that I had a task force for that, I think that would be doing a very poor job. So I appreciate it. If I saw somebody in the grocery store, what I would say to them is that we cannot have a very significant effect on particular prices. The price of oil in the markets today, or even the price of a dozen eggs, that does not have first order consequences to what we're doing. But we do have a really important job there. And it's to make sure that those changes in oil or beef or eggs or milk don't broaden in the economy, don't have second and third order effects. That's our job. That's our commitment. That's our capability, and we're going to deliver on it.
And then is the Fed's relationship with the Treasury also under review? There was the normal breakfast meetings with the Treasury Secretary. Is that something you intend to continue doing? And have you had conversations with the president since you're swearing in?
So on the president, I don't have anything for you. With respect to the Treasury Secretary, he has been posting pictures of our breakfast. So I don't think I can deny that. The long tradition at the central bank is that the Fed chairman and the Treasury Secretary meet weekly. I think we've pulled off 3 of those so far. I believe he's overseas this week, so this will be the exception to the rule. I think they're very useful discussions. The central bank's objectives and our roles and responsibilities are quite delineated from the fiscal authorities. And in my view, monetary policy is independent in the conduct of what we do. But that doesn't mean we're not interested in what's happening with the fiscal authorities. The way I think about it is this central bank needs to have a wide lens, but a narrow remit. We need to be quite interested in what's happening in the world. I won't be breaking any news here to suggest I'm quite interested in what's happening in the Middle East. That does have some effect on our day job. It doesn't mean it's our responsibility, but I think we're going to keep a wide lens, and my meetings with Secretary Besson to this point have helped widen that aperture So we're aware of things that could affect our day job, even if it isn't.
Steve Leisman, CNBC. Mr. Chair, thank you. Mr. Chairman, thank you for taking my question. You had said in the before you became chairman that you thought productivity was a reason why the Federal Reserve could lower interest rates. Do you still believe that to be the case?
So the committee had a discussion of productivity today. AI came up. The way I thought about it before and socialized with the group is that artificial intelligence, the latest generation of general purpose technology, is perhaps as important a change in the economy and business and households that we've had in my adult lifetime. It is filled with both a huge opportunity and with risks. I take both of those very seriously. You may have heard me say before that AI is shorthand perhaps for American ingenuity. That doesn't mean that it's going to be easy. That certainly doesn't mean it's not going to be disruptive. But over the long term, my conviction, and I heard quite a bit of support for this around the committee today, is the United States is a winner as we go down this. The United States is ultimately going to be better off in that. Now, to bring that back to the conduct of policy, timing, scale, speed, implications for output and employment, it's one of the things we have a task force to do.
If you don't mind, a follow-up from the other side, which is that when you look at the strong job growth that's out there, the elevated inflation, GDP seems to be going pretty good, and the stock market seems to be soaring. Do you look around this economy and see the funds rate being restrictive?
So that's your second question. I'm going to give the same answer that I gave before. I'd say as I think about the conduct of policy, what matters is what's the effect of policy? Not what do we say, but what happens. And the best way I can describe it is it's uneven. I do see some restrictiveness in things like housing. It's hard to use those same words anywhere else. I'll just make one other point. You talked about one of our dual mandates on the employment side. I don't believe that we have a cruel choice. I don't share the view that was expressed a few generations ago that Federal Reserve chairmen show up at a podium like this and say, you got to choose. And you're going to have to decide whether you're willing to tolerate higher inflation to put more people at work. I don't believe in that. What I believe is if we do our job, we can make strong growth, low prices, and strong employment mutually compatible. And so what you heard from the committee today is we've got some work to do on the price stability front.
Nick.
Thank you. Nick Timmeros with the Wall Street Journal. Chairman Warsh, you've said repeatedly credibility is earned by delivering. If credibility requires delivering, the move would be to tighten or at least to threaten to. Now, you didn't do that today. Why not?
That judgment you expressed was not expressed by any of the 19 people around the table. We'll be meeting in 6 weeks. We'll take up the issue again.
And if I could ask about AI, the build out is generating enormous demand right now, CapEx, data centers, power. The productivity payoff may be further out. So in your judgment today, is AI adding more to demand or to supply?
It's a good question. At the central bank in an economics profession, what we spend most of our time doing is counting demand. It's easier. We can see it, we can count it, we can check it, we can revise it. What we do, though, is we infer supply. You'll notice in the second paragraph of what one of your colleagues described as a very short statement, we have a sentence on the demand side and a sentence about the same length on the supply side. They're both important. Just because we can count one better than the other doesn't mean we're going to favor one more than the other. With respect to AI and the growth of data centers and infrastructure around it, we're counting the demand side, and it is no doubt showing up in GDP figures. We can be less certain when we infer the timing and extent of the growth in the supply side. It may well be an intuition the supply side is going to expand, but it'll take longer. I just described it this way. There's a race between supply and demand. Milton Friedman says that the only thing we know about economics is that there's a supply line and a demand line they ultimately cross. When they cross and what are the implications for policy? The good news for you is we have a task force for that.
Andrew.
Thanks, Mr. Chairman. It sounded like on the task force on data that you were looking at overhauling or completely overhauling the system of national accounts, the way the government mines the economy. Is that your ambition?
In a word, no. In a few words, much of this data gathering happens in other government agencies to which we owe a tremendous amount of respect, tremendous amount of deference. But if in the course of this, we come up with recommendations, which Fed staff have already begun to develop about things that they could be doing to help inform us as policymakers, we're not going to hesitate. Again, I don't want to try to delineate the four corners of the research of the task force on data, but I do think there will be a review of official statistics, and at least as important, a view of bringing the best practices from the private sector and new analytical tools made possible by AI so we can forge these into a fabric that gives us better real-time information. So as I mentioned before, when we're making decisions that we'd say are real contemporaneous data, not data that we call contemporaneous, that's really an echo of history.
Okay, thanks. The other question I wanted to ask is related to the building renovations. Are you considering any changes to the renovations, the projects, just in light of the fact that they became kind of a political football in the last year?
I heard something about that. I don't think I'm breaking any news, but my view, when you show up at a new institution, you should go meet with the Inspector General, just as a matter of good practice. It's a practice that I hope to continue. I've had one meeting with the Inspector General, and he told me what I believe the world knows, which he'll be coming out with a report on the building and the building projects at some point later this summer. I'll be interested in reading the report. From my perspective, with a forward-looking glance, is there anything that we can be doing or should be doing from this moment until the completion of the project to do what we can to be good stewards of taxpayer money and make sure that we're delivering on the promises that we made? Some more work to do. You might not be surprised in the first few weeks. I've been somewhat preoccupied on other matters, but I promised to get to the full breadth of the Fed's tasks in the weeks ahead.
Victoria.
Hi, Victoria Guida with Politico. So I know that you did not submit a forecast, but you are the person who is authorized to speak on behalf of the FOMC. So I'm wondering if you could tell us in the SEP, the increase in the expectations for inflation, is that all because of the Iran war? What was the discussion around what would the expectations for inflation being higher and also potentially growth being slower?
So my read of what I heard in the room reflected, I must admit, in the SEPs, is half of my colleagues thought the policy rate, given all those developments, should be at this level or lower between now and year end, and the other half thought higher. That 19th voter was me, and I didn't submit one. There's a range of views on the questions of first and second round effects, no resolution or conviction, but we'll be meeting again in 6 weeks. I think we're going to know more then. And I think that my colleagues are very attentive to incoming developments between now and then.
And can I just quick follow up on the SEP? You said that you're still encouraging your fellow committee members to submit forecasts even if you're not doing it. So what do you think is the benefit of them doing it even if you don't?
That's the commitment that the FOMC made, and it's a commitment that I hope we live up to. Commitment we made was to deliver price stability. I expect us to live up to it. By the time we get to the end of this year, as I mentioned, I wouldn't be surprised if there was a new communications framework. There were some changes to the SEP. That's a committee discussion, a robust discussion. I think we'll have it. I believe we're going to come to a better mix of communications to deliver on what we promised, but I wouldn't want to prejudge what those are. But between now and then, I would continue to expect colleagues to submit their SEPs. Some of them, I think, believe that the practice is currently structured is okay. But I heard a lot of interest in real reform, generally about all these topics. You didn't ask it, but I'll answer. It was a pretty gracious couple of days, and it's been a pretty warm few weeks. The institution wants to figure out how we can do better. The institution's going back to first principles, and I'm encouraged that what we've done in the statement, what we're thinking about doing with respect to the SEP, that instinct towards a new chapter is a real one. And by the end of the year, I hope we can put some points on the board, both in form and in substance of delivering.
Going to end up for the last question.
Thank you, Mr. Chairman. Andy Curran, Bloomberg News. Could you guide us through, please, some of the principles that guide your own reaction function and tell us a little bit about the kind of conditions that you think when the Fed should respond?
It's going to be a very unsatisfactory answer to the final question. The Federal Reserve has a lot of responsibilities, not just in monetary policy, but in supervision and regulation, consumer affairs, and payments. My own view is our credibility comes from delivering on what we're saying we're going to do across everything we do. I've devoted more time in my first 3 weeks to monetary policy than all those things. But the more we deliver on our promises as good supervisors and good regulators, the more benefit we get, the more credibility enhancement we have in monetary policy. When we deliver on our price stability objectives, which we will, the American people will feel as though the hardships that they've been living through, in part because of inflation in the last 5 years, are in the rear view mirror. And that credibility will have dividends across what we do. And the institution will come to press conferences like this, always with an impetus to reform, always with an impetus to do better. But we're going to put some points on the board.
And Mr. Chairman, strong labor data in recent months. How would you sum up the labor market right now? Do you see it as stable and as potentially a source of inflation? Thank you.
Yeah. So the committee. If I were to try to capture how the committee thought about it, the committee thought that the labor markets were stable. There were some people around the committee who thought that it was trending better than that. Trends matter more than data points. What's happening over 3 or 6 months matters more than any one data point, any one data release. And I'd say the jobs data has been moving in a good direction. If I heard one other thing around that subject over the course of the last couple of days, what I heard was that strong productivity-led growth is not something that we fear, but something we embrace. Thank you all very much.
Stand by. 3, 2.
So, wait, 1 sec. Let's just.
Fed is going to be far different from Fed's path. He said, and I quote, made some changes today, expect some changes to come. You saw those changes immediately in the statement, which was shorter. It was simpler. He said, quote, just gives you the facts. There was no forward guidance in the statement, to which he said we dropped forward guidance, quote, not well suited to current policy. 18 of 19 members, as you know, gave their projections as part of the quarterly dot plot. Warsh did not. The Fed chair suggesting, quote, for me, it's not helpful in the conduct of policy. He underscored the Fed's commitment to getting inflation to the objective of 2%, said, I am pleased to report that members are unambiguous and unanimous. This committee will deliver price stability. There was the task force, of course, in 5 areas: communications, balance sheet policy, the use and reliance on data sources, productivity and jobs, inflation frameworks, examining the drivers of inflation. He said there could be some changes to the communication structure in the future. We already learned from the statement itself that this was a much more hawkish view from the Fed. The dot plot certainly was. 9 members projecting a rate hike, 5 seeing 2 rate hikes, 1 seeing 3, and 8 projecting to hold. Very interesting first meeting from Kevin Warsh. Welcome to the halftime report. Excuse me, to closing bell. I'm Scott Wapner. Let's check the markets for you here too, because they are moving. The stock market did turn lower on that more hawkish statement from the Fed. You still have the Russell 2000, which is in the green. The dollar was up, rates were up. So that's the story with about 45 minutes to go in the trading session. Joined as always now by Jeffrey Gundlach. He is the
Okay. So that was the first time listening to Warsh. Overall, I thought that this was pretty positive. The current macro environment is a different situation. The person that we're locked in with for a long time is Warsh. Okay, so I would worry less about the current decision that we might see in the short term, and worry a lot more about how we actually think that, is there going to be political biases? Is there going to be, you know, a new way of thinking about things? Is a new way of thinking about things, creating these task force, is that going backwards? I don't necessarily think so. I think it's always been an extremely hot topic that the data that the Fed is going off of is delayed, that they're going off of historical data. I don't think that he is being, how do you say it, like contrarian by saying this. Now, you know, we'll see if the decisions that they make, it's way too early to decide if keeping rates steady, potentially hiking rates in the future, cutting rates later on, whether or not that those will actually be good decisions in the future. Who knows? History kind of lets us know those decisions. But so far, I like Kevin. He's definitely a smart individual. He's young. He understands a lot of the innovation that I follow, crypto, AI. I see eye to eye with those types of people, those, you know, previously private equity guys as well. It's like, it just comes from a space that I can understand. So in that way, I'm excited to hear about his commentary in the future, because it might be one that, you know, we understand the decisions much more easily. And if that's the case, then we can foresee what decisions will be made before they're actually made. But the market's down 0.6%, actually sinking a little bit now versus where we were during the call. The call almost brought us back to green, and then ended up coming back down afterwards. So, you know, who knows? Now we're down to 0.7% on the S&P 500. And not affecting all names. Like I was looking at Robinhood here, up 11.6% still. I was looking at Nebius, 291. At one point, it was 297. You know? So we'll see. But ladies and gentlemen, that's it for me. I thought it was a good FOMC. Maybe the direction of certain outcomes is not what we want, but I think it's about whether or not you believe that they have your best interests at heart. And they're not doing this for political biases, for to stay elected or something along these lines, which could motivate a different outcome than what they truly believe is the right decision at the Fed. Thank you all so much for watching. Really do appreciate your time. Until next time, bye for now.